And we are live again. Welcome back, everybody. This is a super, super important show for anybody interested in tokenization, blockchain for TradFi, and generally the real world asset space. We already know the future of finance will be 24/7 and based on blockchains, but there's a catch. There's a complication around on-chain finance that a lot of people haven't realized, and Eyal Daskal from CRYMBO is going to be here to help break that down for us. Full disclosure, this is take two. In take one of the show, Eyal, who is based in Israel, had to leave the show for an alarm. So he had to step out. Everybody's safe. Everybody's okay. So this is the second take. So if you're joining us again live, thank you very much for being here. If you're watching this back later, no stress. All the content will be here and you can follow along as you go. This is a LinkedIn Live. So if you're joining us, please do ask your questions in the comment section and we'll do our best to get through those either live or after the session. And let us know what you're building. Let us know whether you're in the RWA space, TradFi, tokenization platforms, blockchain infrastructure. What are you working on and what are the challenges that you're overcoming in terms of helping to build tokenization and the future of finance? Eyal, welcome back for the second time. Clearly, you're alive and well and everybody's safe. For those people who don't know you, could you give us your brief introduction? I realize we're doing this for the second time over, but if you could let people know, how did you find your way into Web3? And then we'll get into the CRYMBO story.
Great. Thank you so much, Anthony, for having me and have the patience with the unique situation. So all know my name is Eyal. I'm the founder and CEO of CRYMBO. I started my journey as a traditional finance employee, and then I started a company that traded OTC transaction between the bank, which call it interbank trading. We traded billions of transactions between the 50 biggest banks in the world. We traded OTC trading transactions that created a lot of manual work, and the settle took like 2 days to settle transaction. After we sold the company, I understand that if we want to see the next generation of the financial institution, blockchain should be the right place to settle transaction. And that's where I started to investigate how blockchain can embed it in the financial institution. And this is basically was the trigger to start CRYMBO, to help financial institution to embed a digital asset in their current activities, if it's additional tokenization activities, real world assets, or any trading related to blockchain or digital assets.
Got you. So you've clearly gone through the fintech route, which is certainly different to some. Many people find their way into blockchain technology and then work their way back into understanding different industries. But you've been finance from the get-go. You've seen the transition. You've seen the progress being made. And you've bet the house on tokenization of assets. So exciting to hear more about what it is that you're building. So for those people who don't know CRYMBO, give us a little bit of an introduction to the business. How did you start and what are you working on?
Yeah. So CRYMBO is basically, when we started CRYMBO, we want to understand what is the problem of financial institution to embedded digital asset. As we believe, and my vision is that if we want to see mass adoption, traditional finance must be part of this play, must embed this transaction through the blockchain. So while speaking more, I think that 400 different financial institutions, we figure out that the main two problems are, one, regulation, how to basically embed it and to navigate this complex technology. And the second problem is how to make money. We started to build the bridge between traditional finance and Web3. The idea is to build a technology that allow them to embed the regular activity that they used to do for any transaction with the blockchain. And we find out that technology doesn't work together. In one end, you have the traditional finance that require off-chain processes, require to understand who stands behind the transaction and to work with fiat, while blockchain works with smart contracts, fully on-chain, and require a lot of tools that work differently with the transaction. In Web2, we are doing transaction, we just transfer data between two counterparties. When we are working on the blockchain, we need to transfer actual value. and how you basically manage all this transaction in securities, in data, and reconciliation even with the off-chain services. And CRYMBO is a core banking for the new generation of banking. We connect between the neobank, the digital banks, to neobanks, the decentralized banking. So we build a new core banking that allow them to operate on the same platform, traditional assets with DeFi assets alongside each other.
Got you. So trying to make sure that we can get as much of the real world existing jurisdiction specific or region specific regulation compliant and on-chain at the same time. If I'm paraphrasing slightly, because whether we like it or not, blockchain is a technology that changes the game in terms of how we can operate financial services, but we can't avoid the regulation. We can't hide from that. And those who've been speaking most loudly about regulation in Web3 have been advocating for it. Now we're here, the rubber is hitting the road and we're actually at that place. But as you described, it feels like either we're seeing tokenization theater, which is, yes, we've tokenized things, but this isn't really operational 24/7 decentralized banking or the experience we'd like it to be. We're creating walled gardens of tokens that can only exist in small places, which loses the opportunity for more liquidity or creating more and innovative markets, which again is a halfway house. It's a compromise. And so there's more we can do to get to a fully fledged, full scale, full potential decentralized finance. So if I'm summarizing that right, I'd love to jump into what are you seeing the shortcuts, or how are you seeing the finance industry approach tokenization and on-chain assets today in a suboptimal way?
Yeah, so you're totally right. So the idea is, are we going to leverage the blockchain for tokenized asset? And I think this is the future. And I can tell you a very interesting story from, I think, from the last 3 or 2 weeks, that the prices of the asset collapsed. Investors called me, listen, what's happening in the industry? Everything is collapsing. Do we losing the market? I look at them, I say, or I don't understand something, or we are not living in the same world. I look at the numbers and we have the best months ever, and they speaking with me about the pricing. And so I go out and try to understand why is this mismatch between what the market sees and what we see while working with financial institution. And the number is very interesting. If you look back 1 year, 3 months, 1 month back, we see a drop in the price of all the crypto assets in 30, 35, even 40%. If we look at the volume and the market share of stable coins and real world assets, we see a growth of 35, 40%. This is a spread of 40 or 70, 40, 80% spread between the actual crypto prices to the size of the stable coin and the real world asset. It's 80% different instead of market going down. So that's exactly where the market goes. And now the question is how to do it right. And if we look all the tokenized, the big players that playing with tokenized, we see that they have a lot of limitation. They actually move assets from traditional asset to tokenized asset, but they are doing it in a closed environment because they have a blocker from the regulation that not allow them to transfer the assets between wallets that do not know who sits behind it. Okay, so if you look at the tokenized project, they are isolated in vault, that all the vault are secure with KYC manually to make sure that all the players are verified. So you don't have secondary market, you don't have DEX exchanges that allow them to transfer these assets. And if they're going to use with different tools, like native blockchain tools that allow them to transfer all this regulation requirement on the transaction itself, we suddenly can see that we not just moving assets from the real world to the blockchain, we also leverage the technology to allow to trade in the open blockchain and bring a lot of liquidity to the industry that not exists today. And this is where I think the next phase of the market, and if the financial institution understand how they can do it right and still leveraging the technology, this is going to be a huge change in the market, and basically we see the scale.
Got you. So we're seeing an awful lot of capital accruing on chain in the form of stable coins, or some sort of fairly well-established assets like Bitcoin, where it's easy to start, or rather, that's the point in which capital is then able to be fast-moving, 24/7 blockchain based. You're entering the system. What you're saying here is that what we've built so far, at least from a traditional finance side, is still very, very much limited in terms of its speed of movement, its range of movement, and its breadth of movement, in terms of being able to take up opportunities or to attract capital to different types or products or jurisdictions. We're still restricted by traditional finance manual process in some case, or semi-manual process.
Manual processes, and very linked to the Web 2, or basically to the physical verification, which as you mentioned, it's not ready in 24/7, and the global work 24/7 all the time happening, but it's weekend, so we can do nothing. It's midnight, so we can do nothing, but the market moves. We have 24/7. We have agents that work today 24/7, and the capital market is stuck with Monday to Friday between specific hours. So a lot of the market change, the way we consume data, the way we can consume and buy things online, and the money still stayed off chain. And this is, I think, the change that we are looking to see, the correlation between the adoption of the technology on our daily basis, to see it on the finance as well. And because of the regulation, it's pull it back. And if we replace the tools with advanced tools, with the advanced technology, we suddenly can see that we can trade 24/7 suddenly, and we can trade in any assets, real estate, for example. We can trade real estate if we don't go to the post office and stamp something, or need to wait 3 months to someone to transfer his ownership on a house. You can do it in a click of a button, and to claim the ownership of this house, very similar like you do it in stocks or other stuff.
Got you. So what we're talking about here is a mix between kind of digitization of processes, which again, in a lot of finance is already there, right? Most assets are traded digitally in some way, shape, or form, just not on blockchains. And they are experienced in managing compliance in some forms digitally, but we haven't taken that further step to be able to enable 24/7 compliance with tokenization and on-chain assets. So I guess the question to you then is, obviously we're seeing the market move. We're seeing traditional finance tokenizing assets and playing in RWAs and ETFs and crypto assets already. Do we need to wait for more regulation to be able to do this? Or is there a solution that's ready now that we can implement?
Yeah. I don't think it's about the regulation. It's about how we're going to work with the regulation. The regulation exists. The regulation do the fine-tuning to be able to let us work, right? And without us to understand what the regulation require and mitigate this requirement, we won't be able to develop, right? We can't wait for the regulation to come in and jump on us and say, listen, you can do it. I just had a call with one of the regulators in Europe. He said, I don't have any issue. Nobody asked me to do something. So they need us to move things forward, that they will come and try to regulate it. And they have very basic requirement. I want to know who's responsible for the transaction. I want to know that the money is safe and clean. That's the only, I think, basic requirement. Now we need to take the technology and adapt the understanding how the regulation work, and do it exactly how we did it in the past, but just with advanced technology that fit to the same idea of making our money safe. This is the principle of regulation: make the money safe of the people that play in this industry, and that's our mission. And that's exactly where we aim to go. Try to understand how the regulation wants us to act, build the right tools for that, give them all the information and data in the right way, that they know how to read it and to understand what's going on in the transaction. And if you transfer money on-chain, it just makes sense to transfer identity as well. The identity should follow with the money. If I know and feel safe that my money protect on-chain, why not transfer data as well? And I think that's the main point.
Got you. And I mean, that's a relief, honestly, because being able to say, right, we need a whole new round of compliance regulation in different jurisdictions to be able to allow for 24/7 markets on chain, that's going to put a lot of time on the broad implementation of what we're talking about here, so that you don't see that that's a main barrier. And I share your view. I think that's a good thing. I think we've got plenty of guidance in terms of how does finance manage payments, identity, KYC, KYB, source of funds, travel rule, etc. I don't think the on-chain part of that. Pseudonymity, yes. Privacy, yes. Web3 has challenged that to some extent. I spent 2.5 years working for a zero-knowledge-based privacy project. And in that time, I mean, a big challenge for the implementation of privacy through that particular architecture is regulators need to be comfortable with the idea of the black box. They need to be comfortable with the idea of having a proof server or a proof engine that does all of the activity behind the scenes, doesn't disclose information to anybody, and we can selectively disclose it later. That's an entirely new architecture from a technical perspective that regulators need to be comfortable with. If they're comfortable with blockchains and digital assets in their current form, then we can crack on, providing we don't create things that are too wildly different or too difficult to understand or do diligence on. So maybe before we get into the use cases, just talk us briefly through what do you see in short form? What is the infrastructure that these institutions need? What's the widget? What's the gadget? What's the process change that allows us to go from these walled gardens or manual, non-automated processes we have today to a future that allows us to have agentic transactions, 24/7 transactions, open markets, capital flowing freely?
Yeah, so I think this is exactly the point what institutions need. In the end of the day, they need an infrastructure that understands the blockchain transaction and helps them to monitor it and to work safely on that. As you mentioned earlier, regulators want to feel comfortable with the transaction. If they feel comfortable with transferring funds between wallet A to wallet B on-chain, why not to transfer other things on the blockchain itself? You just need to do it right. Zero knowledge, it's one of the solutions for that, but they don't know how to work with it. So if we do it, and basically zero knowledge don't really solve the problem, because the way of regulation work globally, it's that every counterparty that regulated must take responsibility on the trade. If you say, it's not me, I trust on that one, then it's become an issue for the regulator. We feel uncomfortable. Okay, he trusts on that. I go to the other one, he trusts on the other one. So we kind of losing the understanding who is involved in the transaction. So the way regulators built many years ago, and I think will keep working forward, it's that each regulated entity need to watch that the transaction is aligned with the idea of how to regulate it locally, by the way. And that's where the technology need to do the change or the shift. If we take zero knowledge, it's not really transfer information. It's transfer the idea that someone checked it technology-wise, and it's right. And it's not enough for the regulation structure. And this is the infrastructure that institutions need. They need to understand that they have the basic information as they need to have, like data, specific data. They need to have it. Now let's build a technology that allow them to have the information and the data that they must have in process in the principle of having their business. For example, very simple infrastructure, node monitor, listen to the blockchain. None of the institutional understand that you need to listen to the blockchain 24/7 to understand the transaction is arrived, to do reconciliation. They can't trust APIs anymore. They need to have some tools that sits on the blockchain, listen to the blockchain. They need to monitor the blockchain. They need to have some automation that not related on Web 2 technology, like swiping wallets. How do we do that? Who support us in this very basic technology, just to transfer from one wallet to other wallet automatically? This kind of technology, they need to be built in, like transfer in the old world, Web 2 to transfer transaction. They push on a button, API call, transfer from account A to account B, it's easy. Now they need to do the same thing on the blockchain and make sure that it's cleared. And this is where the infrastructure come in place. This is the new core banking solution that need to support this kind of security this kind of data-driven processes that not rely on some APIs that not really can give them the information they need, or some KYC tools that not really working on blockchain, okay? And why we need automation and why need this infrastructure? Because if a smart contract or agent responsible for a transaction, it will come to the core banking and you say, okay, what I need to do, I want to pay who I'm speaking with. Smart contract do not know verify identity, okay? We need to build the oracles like Oracle to show them or to verify identity, to verify pricing. Some of the solution already there and in very big usages. Why not to take it another step forward and to make the other solution work on the fully decentralized? And that's the idea, to know to speak the same language as the technology work today.
Love that. Love that. And it's when you break it down that way, it sounds very clear, but non-trivial in terms of what's required to be built. Obviously, we've got to be able to do that in a way that is accurate, works at the speed of the internet, like you said, works with Web3 technologies, which are smart contracts, but also satisfy the burden of proof of Web2 regulators. And that also doesn't result in correlation or exposure of sensitive data, right? While TradFi is definitely clear on the idea of 24/7 trading, they are definitely not clear on the idea of completely open financial markets and full disclosure of all trades to all parties all of the time. So we have a complicated mix of requirements in there for sure. Eyal, we've talked in theory. Let's get into some practical. Let's show some stuff. So you've very kindly shared with us a couple of demos. So we're going to go through one on from the CRYMBO perspective, how the stack works. And then we've got an idea that will follow that on real world assets if we want to dive deeper. So I'm going to hit the play button. You let me know if you want me to pause anywhere along the way. And let's talk through how the CRYMBO platform works from a core banking perspective.
Yeah, thank you so much. So the idea, and you can see over here all the different moving parts that need to be connected to the core banking to be able to operate a blockchain transaction, okay? And you need to build, I won't say in-house, but you need your infrastructure to be able to support on-chain activity. So if it's a node monitors that listen to the blockchain, if you need automation swiping and verify wallets, validators that validate that this wallet specifically belong to a specific customers, and how do I verify his ownership of the wallet? A lot of other stuff that we see over here need to be able to support the core banking. A lot of conversation we have with bank and financial institution, they have their core fiat banking platform. And then we want to inject to this processes crypto, then they stop working. They don't know exactly how to verify, how to become a core banking for crypto. It means that you need to make sure the transaction is arrived to its destination. You need to monetize the 24/7 that this asset reconciliate with the accounts of the customers. And these challenges that the core banking do not know how to act. And this is where exactly what we see over here, that if we want to do a single transaction of, let's say, crypto from wallet A to wallet B, we have at least 5 different vendors that need to be involved. Wallet infrastructure, KYT to monitor the transaction. We need to have a liquidity provider to make sure that we know, and it's special liquidity provider, it's not like the stock exchange. And we need to have the custody in place. And we need to have a lot of other new vendors that not exist in the traditional finance. And all of this provider need to be connected to a single process of transferring value from wallet A to wallet B. And this feature supposed to be included in the core banking solution. Now, some of the processes already exist, okay? But some of the processes not exist. And this is the reason why financial institutions are afraid to go into this market. I had a conversation last week with one of the biggest banks in the world, and it doesn't work with the open blockchain. You know what is the reason is? It doesn't know where the gas fee sits before the transaction, okay? So
Wow.
if a gas fee involved in transaction and it sits in a wallet that it doesn't know where this wallet, it's become a risk. So all these risks need to be closed when a financial institution go to the market. I really understand the issue. Listen, yeah, there is some money that involved in the transaction that I don't know the source. I want to know where the source come from. And we provide him, and as you see over here, a lot of dashboard that support him to give him the full color on his all activity 24/7. There is no one transaction that not include all the parameters that make the financial institution become comfort with the transaction. Okay, so the idea is to put all this information for every transaction, and the amount of data that we collect in the platform to show the bank, to show the payment company, to show the EMI who or what is involved in this transaction. This is our unique offering for the market. In a regular transaction with fiat, you collect very specific information. When you work with crypto, you need to collect the wallet source, the KYT that you check the wallet. You need the PII, the owner of the wallet, and the receiver. And all this information need to be included in transaction and become automatically. And that's where we bring the value. So the regulated institution basically work the same like you work with the other transaction, just with the right tools to make sure that all the information that related to the transaction is the right or defined, not just right, but exactly as it defined by the regulator framework in a specific local. Okay, and the different activity that we support, it's like deposits, withdrawals, payout, pay-in, connect your funds to credit cards, staking, real-world assets activities, stable coins, of course. This is, I think, 95% of the volume today. And everything done on the same platform, and very, I would say, flexible to create different workflows, because the idea in the end of the day for financial institution to work, it needs to have the right workflows in his day-to-day work. Because in every workflow, there are so many people that involved that need to verify it. And our job is to build the right workflow, confirm it with all the counterparties that involved, and once it's confirmed, then everything done automatically in that workflow. And we build more and more workflows that fit to the understanding of the, I would say, fiat world, the regulation, whatever they need to be supported to feel comfortable, but using the technology of tomorrow or for today with us that manage the blockchain transactions.
Got you. Thanks for the explanation, Eyal. And so what I think we saw there was we saw a bit of the top part there, which is the kind of the CRYMBO Connect part, which is the dashboards, the role-based access, the identification of certain transactions if you have the permission to do so. So you're keeping a real-time record of transactions and proofs if that's regulatorily required. And then what we didn't see, which I'm assuming happens in the background, is the link between the blockchain via the Oracle into the dashboard that says these are the transactions that have happened, or on the transaction side, here is the proof, here is the KYT, KYB, KYC that needs to be shared. And so you're accumulating the data in the dashboard, but the automation on the exchange between the blockchain happens through the Oracle. Am I am I in the right ballpark?
Yeah, exactly. So what we have seen, it's basically the CRYMBO core banking that manage all the activity for between the financial institution on the back end or below that. What managing all this transaction is the decentralized approach. Is making all the transaction verify on the blockchain. So we don't keep this identity off-chain with off-chain processes. We take this identity and with our unique approach, we know how to link it on the blockchain level. So we create a powerful core banking that keep the same processes they like and understand to see, but with steroids, with the decentralized approach that manage all the processes on the blockchain itself.
Got you. I think at a high level, I get it. And hopefully those listening in do. Again, if you don't, please do jump into the comment section. If you're on LinkedIn watching this live, please do ask your questions to Eyal. Either we'll come through them today or we'll come back to them. The nice thing about LinkedIn, we can see the comments forever. So if you have questions as you're watching this through, please do ask. It can be a great source of feedback or a chance for us to further explain what it is that's been built here. Eyal, we've got a second demo that I want to share, which is focused on real world assets. None of us love the term real world assets because it suggests that there is an unreal world or that, that there is a virtual world in which assets exist. All assets are assets in some way, shape or form, but we'll go through the demo. Let me share a screen again and I'll jump into the Oracle identity for real world assets. Because I think this will hopefully kind of also add a little bit of color to how the Oracle works, right?
Yeah, exactly. So this is basically the backend where we manage all the identity on chain. And as we spoke earlier, the idea of real world assets that we want to transfer assets from the off chain, from the regular world, I would call it, to the on chain transaction. And there is a lot of challenges. How you transfer value, okay, without on chain, without having the issuer understanding who stands behind the transaction, because the blockchain built in a way that nobody knows who stands behind the wallet. And we added this data on top of the blockchain and linked it to every transaction. In a way we do that, we verify the ownership of the wallet, including exactly the PII of the customers, and linked it to the specific wallet, and the user itself can allow to any project that you want to work with to allow him to use this information. And the way we build it, it's just the two counterparty have access to this information. So none of the blockchain ecosystem can see who is involved in transaction, but they can see that this transaction was verified by the counterparties. So we use the public key and the private key and all the data with a validator to make sure that no one can have access to that except of the participate in the transaction. Very similar to a value transaction. Okay, you have access to your coins just with your private key. That's the same approach with us. You can have access to the data just with the private key. So the way we protect our assets, I protect the identity, but we created a unique data on top of the blockchain not exist. This is the PII. And this is, I think, a unique change that will allow institution issuers to work with secondary, with DEX, and bring the all liquidity from the blockchain. And this is basically summarize our approach. Do the same thing, trading between counterparty, as you know how to do in every world, in every platform, but do it right.
Got you. And I understand it here. And obviously the demo is showing, clickable activity that's going on in terms of, approving in manual time. But I'm working on the assumption that the dashboard or the process automation sits behind that is, as long as there is an agent, an AI, or some sort of process automation that observes the KYC data, validates that it comes from the Oracle, that it's expecting it to come from, and that it passes the regulatory requirements, that process or that transaction can then go through ahead of time, or that transaction is already pre-approved because you have the relevant information between the counterparties. Is that broadly in the right ballpark?
This is the right approach, a bit different because we bring a unique capability for the transaction. As I mentioned earlier, the smart contract do not know how to verify, or the agent do not know how to verify identity. With the CRYMBO Oracle, for the first time, it can verify the identity before the transaction occur. Okay, so if I did a transaction wallet A, wallet B, okay, in the token itself, I can verify. Actually, ask the Oracle, do I allow to transfer this transaction to wallet B? If yes, the transaction go. If the transaction not allowed, it's blocked. So we can block a transaction before it's finished. And I think this is a strong risk management for issuers, that they know that they can't go to a situation that they did a transaction, it's not allowed, okay? Because we know how to block the transaction before it's end, okay? So if you create a transaction before it's finished and move to other wallet, if it's not allowed by the Oracle, it's blocked. And this is, I think, the regulators and the institution in a very comfortable situation that you can push them for a high risk transaction, which, by the way, in the open blockchain, it's very difficult, because I can send any transaction to your wallet, and from that moment you have an issue with your wallet.
Yes, you have received tainted funds, which can't be allowed, or immediately represents a breach, and so all sorts of other alarms go off, and we don't want spamming of wallets, essentially. And you also don't want the constant iteration of wallet addresses and spinning up of individual unique multiple wallets per transactions for every transaction from now until the end of time, because the tracking and monitoring of that activity alone is deeply inefficient, deeply costly, and just frankly just painful to do. And so this feels like a nice halfway house, rather than trying to go through some sort of other manual workaround or some sort of obfuscation or tumbling of transactions, which can't be the way forward.
As we mentioned, define the rules in advance and protect them to occur if they are not on the right path. And that's the idea. Build the workflow, confirm the workflow, and then everything goes in that workflow, go automatically. If it's not part of this workflow, block it. And this is the approach, and I think that any issuer, any regulated entity feel very comfortable with that, to open his activity to the open blockchain.
Got you. And let's go with the question that I'm sure many people wanting to ask. I'm seeing a few comments coming in here. How do we manage the privacy? So from obviously the demo showed us there on the dashboard that the relevant party is able to see. They're seeing John Doe from organization X with their KYC record. Now, they're entitled to see that, maybe because they're counterparties or whatever else. How do we protect that data from the rest of the blockchain?
Very good question. I think this is the biggest challenge that we solved. And the idea is that you do not want to make a situation that someone can see who is involved. Yeah, it's about privacy and about how you transfer the information. The idea is that first, the data moved encrypted and shared to many pieces and kept off-chain. What we move on the blockchain is basically the point of access for this information. And it's fully encrypted, that the only one that can get for this pointer understanding, it's the private key of the receiver. Okay, so if you are not the owner of the key, you can't have access for that. Yes, the entire ecosystem can see this data included, and it's verified, like very similar to WhatsApp. If it exists, you see one V. If it's verified by a receiver, you see two Vs. So it's bring a very good comfort for third-party regulated entity that want to be involved in transaction. It's give a very good comfort for the regulators to understand which transaction regulated or not. And for me, if I'm a regulated entity, I can choose automatically with which transaction I want to be involved. And as this wallet specifically that involved in this transaction is verified, keep working, his score is getting a better score and very verified against the entire ecosystem. So I think it's answered this question that nobody can have access except
for sure. Party. You're adding some meaningful metadata actually in terms of some verification, but you're showing the amount of time or the amount of instances in which verified activity has happened, but you're not taking PII, encrypting it, putting it on chain, which clearly is a risk in all the ways.
Exactly. So you just need to get the data and to allow the counterparty to have access, but the access done off chain. The idea is that you have 24/7 access to this information with the pointer, and the data holds by the validator, so it's shared and fully decentralized, that even us as CRYMBO don't have access to this information. This is the idea.
Got you. And so that can still go at the speed of smart contracts, agents, and the internet. Doesn't require 4 eyes sitting in a building between the hours of 9 to 5 on Monday to Friday to be able to process and to advance, which I think is what we're all trying to solve for.
This is the approach.
Fantastic. Eyal, thank you so much. You made what is on paper, a very complex and occasionally slightly boring concept come to life with real clarity. So I'm very grateful for that. We do have a few questions in the chat, but this is the one that I guess a fair few people have asked. How do people find out more? How do people find out more about CRYMBO? Where can they look you guys up?
The funny thing, on the traditional channels, we are very active on LinkedIn. You can find us on X and Telegram, and of course in our website. So we are very open for any connectivity on everything, but the website is the best way to communicate with us.
Got you. So that's crymbo.com?
Exactly that.
Super easy, super easy. Not .xyz, not .io, nothing too spurious, too Web3. Crymbo.com is the place to go.
Exactly. And 2 clicks and you have appointment.
Fantastic. And as you guys are growing, as you're scaling out, who are you looking to work with next? So in terms of partners, in terms of clients, I mean, you mentioned at the start of the show, you're already talking to some of the world's biggest banks. You've been working and trading with some of the biggest banks for your entire career. Who are the people that you really want to reach out, or which platforms or parts of the industry ecosystem are you most interested to get some outreach from?
Yeah, so we're working with any financial institution, regulated entity that want to embed it or to work with digital asset. This is our current customers. The platform is live and generate revenue and serves a lot of customers in the industry. And as for today, we are working to, of course, to enrich and have more customers as we go forward. And unique, and we're going to announce it very soon. We started to embed it natively on specific chains, mainly the big ones. Like we work with the 3 biggest chain in the industry today, that going to allow identity natively on their chain. So you actually can see on the Explorer itself that this transaction is verified or not. And I think this is the main change, and this is where we look that and I think these days we see that the native crypto players understand that without the institutionals, there is no game. And most of them are trying to target it and give them the comfort to work in their chains. And I think 70 or 80% of the chains targeting the institutional understand there where they can make money. And we can support them to give the right tools and infrastructure for this institutional to start working with this chain. So now we are in a process to sign with as I mentioned, the 3 biggest chains to make it natively on their chains that will be able to transfer identity natively and to see it on the Explorer itself.
Fantastic. Looking forward to hearing those announcements. Seeing the verified stamp on a blockchain is going to feel really interesting. It's gonna feel like a big moment. It's gonna feel a little bit like a Web 2 moment in Web 3, or a maturity moment, shall we say. I think it's long overdue. Obviously, it doesn't prevent any of the existing pseudonymity, anonymity, privacy, automation, all of the Web3 things that we know and love don't go away because of this, which I think is reassuring, or should be reassuring to most. But for those who want to see tokenization at scale, those who want to work with financial institutions, I'm assuming the tokenization platforms, the custodians and so on would also be great people that you'd want to have reach out to you in the course of time. But to be able to see verified on chain, I think that's going to be a big moment. So Eyal, thank you so much for making it happen.
This is our mission, and I hope that we're going to see it very soon in the big institutional as well. This is, I think, the next chapter of the game here.
Fantastic. So for those listening in, do reach out to Eyal on LinkedIn. Go follow CRYMBO on X. Go to crymbo.com to find out all of the details, documentation, demos, and all of that good stuff. Eyal, thank you so much for joining us today, for demystifying one of the last big hurdles that we need to get to mainstream tokenization worldwide 24/7 for real. I would say have fun out there, but I'm going to revert back to the old outro, which is stay safe out there. We live in difficult times, but I hope you have a great rest of your week, and we'll see you soon.
Thank you so much. Enjoy surfing.
Thank you so much. Cheers. Bye-bye.
Bye.